Hello, everyone. There's another episode of Unedited, No BS. This is the one on Corey with his SoFi stock urgent do this now. 1 day ago. Already has 11K views.
Down over 10% in a month. The market has been turbulent and volatile for the last month and a half, to say the least. Does SoFi look like it's a buy? Well, that's what we're going to find out. Don't worry about subscribing. Tapping the like button. You're looking for the coaching and Discord link. We will get to that right after we talk about SoFi.
So it's copy. He copied this from Tom Nash, by the way. You remember Tom Nash? The slap of the notebook, and it's like, don't buy nothing, don't click nothing, don't subscribe nothing, and then he just talks. That's how Tom Nash does it.
SoFi, which had outperformed the market for 2 consecutive years, is currently experiencing a downturn and is lagging behind the S&P 500 index. The stock has seen a decline of over 10% in the past month, primarily due to investor concerns following its 2025 earnings guidance. What we're going to explore is whether if it's a good time to invest in SoFi stock right now during the recent drop or after this drop.
I'm going to say yes. The answer is going to be yes, because SoFi does have a good CEO, and they're also a fintech, and right now they're kind of getting a bank multiple.
SoFi's forecast for 2025's earnings per share, EPS, is projected to be between 25 cents and 27 cents, which is slightly below consensus estimates. CEO Anthony Noto explained that this cautious guidance reflects the company's strategy of investing in long-term growth rather than focusing solely on short-term profitability. He stated that these investments are expected to enable SoFi to achieve an annual revenue growth rate of 20% in the near future. Noto highlighted that the fee-based revenue, which surged 63% year over year in Q4, constitutes 40% of the company's total revenue and will be a key driver of future growth. SoFi has been steadily expanding, evidenced by a 34% year over year increase in its member base, which surpassed 10 million by the end of 2024. This growth opens up significant opportunities for cross-selling and upselling. Notably, 40% of new members engaged with additional products within 30 days of joining. While SoFi is concentrating on its technology and financial services segments, its lending business has also performed better than expected, with lending revenues increasing by 11% last year, exceeding forecasts. The company has managed to grow its lending operations without taking an excessive credit risk, improving its delinquency rate over the year after a peak in Q1 of 2024. Additionally, SoFi has been originating loans for third parties through its loan platform business LPB, originating $2.1 billion last year. This strategy allows SoFi to serve customers it might not have otherwise reached, while also generating risk-free, fee-based income and opportunities for cross-selling. Looking ahead, SoFi anticipates accelerated growth in 2026. The U.S. Department of Treasury has selected the company to manage the Direct Express program, a prepaid debit card service for approximately 3.4 million federal benefit recipients, with financial benefits expected to materialize in 2026. SoFi has also partnered with a major U.S. financial services company, which it expects to become one of its top 10 clients by revenue once it fully integrates into their platform. SoFi revised its top-line growth expectations for 2026 to exceed the previous range of 20% to 25%, while maintaining an EPS guidance of 55 cents to 80 cents for that year. The company remains optimistic about achieving annual EPS growth of 20% to 25% beyond 2026. Noto summarized that SoFi's outlook during the Q4 earnings.
So, at what point does he tell you why it's a good deal now? Does he ever state that? I do appreciate him going over it, but look, same thing. So it's a 5-minute video, and he's going to start selling. So somewhere around, and use the same thing. He probably just records it and just plays it in his video to make it a 10-minute video. Because I think YouTube likes it when you have a 10-minute video.
Call by stating that the operating environment is the most favorable it has been since its arrival, supported by lower interest rates, strong employment, active capital markets,
and so. True. I know we speak faster than that. Let's go with a little faster speed. 1.5.
SoFi's unique position as the digital one-stop shop in the U.S. In the long term, SoFi is targeting an adjusted EBITDA margin of 30% and a net income margin of 20%, along with a return on equity, ROE, significantly higher than that of other financial institutions. Regarding SoFi's stock forecast, analysts maintain a cautious stance with a consensus rating with a hold from 18 analysts covering the stock. The average target price of $13.89 is below the current price levels, while the highest price target of $20 from Needham represents a 38% upside from the February 26 closing price. Despite a 124% rise in stock value over the last 2 years, brokerages have remained skeptical about SoFi's outlook, particularly due to concerns over its valuations. At the end of 2024, SoFi's tangible book value is only $4.47 per share. While some may view SoFi as overvalued, it's important to note that the price-to-book metric may not fully capture the company's transition to non-asset-based income. It also doesn't take into account future guidance. Moreover, near-term earnings multiples appear elevated, with a forward price-to-earnings PE ratio of 55x compared to other financial firms. Nonetheless, SoFi is poised for strong, profitable growth, guiding for an EPS of 55 to 80 cents for 2026. Historically, the company has been conservative in its forecast, often meeting or exceeding expectations, so it's likely to do it again. For long-term investors, SoFi's valuations may seem more
All right, it says they meet. Let's look it up. They usually meet or exceed expectations. I think they do. SoFi earnings report. Let's go through the earnings report. Ooh, quarterly financials. Quarterly. Probably look at an easier way to see this. May have to go to Google. Microsoft doesn't really. Google earnings. I'm sorry. Google.com. Let's go with SoFi earnings. There we go. So, you can look at it. This is their quarter earnings. Yeah, they beat expectations, net cash. I guess the only thing is they dropped the net cash. But most of the time they beat. So their EPS, they beat by 36%, they beat by 15%, they beat 60%. Yeah, this is a pretty good video, I would say. I agree with him on the SoFi beating earnings. That's all you gotta really say. Really much of the beat earnings, and they're growing as well. So, other than that, but let's see what his comment section says. It's a very strong company. I have 2,000 shares at $6.20. That's a good price. When you recommended the day I joined Discord. Dang, this guy joined quite a long time ago. I also broke my goals for the year. Started Discord with 37K, closed some bad positions that you recommended. I hope to hit 100K by 2025. Alright. Sweet. I broke 100K in September. Oh, dang, you did that. I broke that last year. I'm currently at 137K. Thank you. James Richard. 16K shares. If it's not goes below 10, I'm doubling my position. I bought 1K more at 1350. Some of these people, definitely following him. Definitely following his advice. Let's see. Let's see newest comments. Go down, plan to sell anything Tesla, please suggest. He's probably gonna tell you the boss join his Discord. 18,000 shares, average 10. Damn, there's a lot of people bought at 10. You have 180Ks. Right? That's a lot of money. It's at $12. Yeah, I guess people are like not happy with that. Let's go with SoFi. Yeah, it dropped like to 12-ish. It's on its way down. It was highs at that point. But yeah, it's during a pretty good correction and everything. This is probably a good time to suggest people to buy. I recommend. But yeah, let's see. I'm pretty sure other people made the same SoFi stock. I'm pretty sure other people talk about it too. All deals done investors. See, why can't you have like other people that come up with a newer Bombshell, Palantir, SoFi. That's a massive plan for 2025. Warning for SoFi investors. SoFi, don't say I didn't warn you. Ooh, 2 weeks ago. Let's see what he said.
Thanks for swinging by, Carl.
This is before.
This lets me
This is before it dropped.
Demonstrated notable financial growth and resilience in the competitive fintech sector. They're making banks look like dinosaurs. The conventional ones like Bank of America, Citibank, Wells Fargo, JP Morgan. The growth is largely attributed to its diversified business model, which encompasses lending.
You know what? I'm a sucker. Let's see what the comments say. Newest. Yeah, I don't have anything speaking of. If you don't say, don't warn me, life. No one's met for comment since what he said.
Investing and financial services, which has attracted exponential growth in.
I don't know what he's warning us of. Let's go. Come on.
Numbers. Additionally, SoFi has achieved remarkable increase in its adjusted EBITDA, and it's become consistently profitable, crushing every earnings consistently, especially the most recent earnings, indicating improved.
Let's go right here.
Surpassing 15 billion, reflecting strong demand for personal loans and refinancing options. Let's dive further into SoFi. I want to show you guys how you can get in and make money in the stock and have some growth potential before it's too late. As of February 2025, SoFi Technologies is experiencing robust growth across multiple of its business models. The company has reported remarkable revenue increase of approximately 45% year over year. SoFi's strong lending segment has shown that its loan originations have long surpassed 15 billion. This shows strong demand for personal loans, refinancing options, and additionally products and services that they offer. They're now managing assets worth almost $1 billion, bolstered by recent launch of new investment products, including cryptocurrency and trading options on their platform. You have to understand that the stock doesn't just go up because of technicals and fundamentals and lines on a chart. I really say all the time that lines on a chart are pretty much reactionary and not a indicative form of what's to come. They're very reactive, not proactive. Technicals and fundamentals and lines on a chart help you gauge the past up until the current point. They're a reactionary tool to show you what's potentially lying ahead. They don't show you what's for sure going to happen. You have to use common sense, fundamentals, technicals, sentiment, news, and understand the stock that you're dealing with to really understand the potential for upside or downside going forward while utilizing all of these tools. You got to remember, when a stock goes up, it's not because the technicals and the fundamentals show that it's likely to go up, but because simply investors and institutions are buying it. Just like you, they're buying the stock. And this is driven by a lot of different factors. Growth of the company, growth of different sectors within that company, strong CEO, strong demand, strong positive sentiment, social media presence, and continued and consistent growth, as well as what analysts say. All of these things factor into the stock, and this is what drives a stock to go up when the sentiment becomes negative, or they miss earnings, or there's some bad news, or growth isn't good, or maybe the Feds just put out bad news on the economy, or that interest rates are going to hike or not get cut, or inflation goes up. Anything you can think of that's bad, specifically bad for the financial sector or stock market, could cause some negative sentiment and people to get fearful and sell, which causes the stock to go down. Shorts get in, they start the $20 barrier. This also has a lot to do with a lot of institutions. Really, $16 to $20 barrier. This also has a lot to do with a lot of trouble breaking the $16 to $18 barrier, or really $16 to $20 barrier. This also has a lot to do with a lot of institutions it down even more. This is also another factor why SoFi is having a lot of trouble breaking the $16 to $18 barrier, or really $16 to $20 barrier. This also has a lot to do with a lot of institutions or big private investors or even small investors that invested in SoFi years ago in 2021, 2022, and when the stock market started pulling back and it went below 20, where they purchased it, or 18, and it tanked all the way down to $6, they had sell orders queued between 16 and 18, and as the stock is rising to that recent high of $16 to $18, the stock was selling off. So if we go back here and look, SoFi hit $18. This whole area up here is just filled with sell orders from private investors, large investors, institutions, because they got burnt. They got in the stock. When the stock went down, they were just waiting for this opportunity. The moment the stock went up, all these sell orders were executed, shoving the stock back down. The next time it goes to the $18 to $20 range, which is pretty much inevitable, I would think, it's going to go a little bit higher because a lot of these sell orders were filled. Again, it will get pushed down. There's going to be a lot of resistance in this area. But if you believe in the stock, like I do, you want to hold it long term, because there's at least a 2x to 3x upside on SoFi, bar anything negative or damning to the stock that could potentially happen in the next few months to a year. But as long as things keep going the way they're going, and Anthony Noto keeps running the company the way he is, essentially, I could see this company reaching $45 in the next 2 to 3 years. But you really have to understand what's going on with the stock. Let me show you what I would do to get into SoFi, mitigate some risk, and how I would put myself in a good position to capture some upside and some downside on SoFi. You can see there's a gap down here between 13 and 1350, and most gaps get filled, not all. And you can see this mostly filled over here, but that gap is still there. And because it was a filled gap, or mostly filled, this is going to be very strong. As you can see by here, here, and here, there's a lot of sentiment in this area. So to really mitigate downside, it really has a floor at this point of $13 or $13.50. If we're thinking about it not filling the gap, which is highly unlikely since it already filled, and resisting it. So if we really think about this in a strong sense, 13 is the bottom, but the gap was filled and it signifies a form of support. So I would think that the bottom here would be $13.50. And that's not going to give you a lot of premium weekly. So we can go bi-weekly or we can go monthly at $13.50. What I particularly think about doing in a situation like this is selling 14 puts and $13.50. Instead of doing 4 puts at 14, I'll do 2 at 14, 2 at $13.50 to help mitigate that downside. We also want to capture the upside to the stock. So what I will recommend doing is I would buy shares of SoFi right now. Let's say about 200 shares of SoFi if you can swing.
200 shares at $15, man. Oh, man. If you bought them, you're stuck with them for a bit. and they're probably making you feel a little regret. But I guess they're not too expensive at 15, 1,500. But man, no, no. Yeah, I wish you didn't recommend it at this point. But you know what? It could have been worse. Could have recommended sound at 24. Oh, you did recommend sound at 24. Anyways, yeah, this guy's giving, except adequate advice at best. It's not like, I don't know. Let's see. I feel like it's just a retail stocks. Let's see. Google. What are the top 10 retail stocks people buy on? Oh, top retail investor. What are top 10 stocks that retail traders buy? There we go. Let's see. Top 10 retail investors crave in 2024. Yeah. So, top 10 on retail is, what is the top 10 on retail? Let's see, it's Microsoft, SP 500, NASDAQ, Apple, Google, Amazon, Meta, Tesla. No, retail portfolios. Alright, top 10 tickers by retail inflows. Looks like they all like to buy. Yeah, the SPY, Apple, QQQ, NEO. Wow, I didn't know NEO was that popular. AMD. Oh, they changed it by the year. Cool. That's insane. I guess SPY is the most popular. Tesla. Ooh, dang. Teslas are very popular. Tesla. Oh, not so popular. Now Nvidia is the most popular. That's crazy. How it just changes every year. You know, TLT. Oh, this is pretty cool. See, Nvidia, Tesla, SPY. Tesla's pretty popular still. QQQ, AMD, SOX, TQQQ, Apple, Amazon, Palantir. See, 2023 is TLT, Google, TQQ, AMD. AMD used to be popular with the retail, huh? Tesla, was very popular in 2023. 2022 was SPY, Tesla. Tesla's a retail favorite, it looks like. SPY, Apple, QQQ. SPY, Apple, QQQ. SPY, QQQ. And retail didn't get really popular until, I guess, stocks became free to trade in, thanks to HUD. Anyways, yeah, SoFi's not really a retail stock yet, but it's pretty cool. I like this, the chart and how they did that and everything. Anyways, yeah, SoFi, I guess you're recommending it before retail gets really popular. Oh, did he copy Tom Nash? Because Tom Nash is really into SoFi as well.
Do you have 20,000?
Yeah, SoFi, 20,000 SoFi. Yeah, SoFi is a very popular stock, I guess, amongst retail.
This stock reached $100 per share. It is currently trading at $16.30. The question is, can it go 6x from here to $100 per share, which means that it will have to leapfrog its current $18 billion market cap all the way to $120 billion of market valuation. I've made a video about a year and a half ago in June of 2023 when the share price was $8.50. And the title of the video was, SoFi is going to change personal finance forever. It was posted on June 2023. The stock has since doubled.
Yeah, it is pretty popular. SoFi stock. Anyways, I have to say, I'm pretty sure that this Investor copies Tom Nash because he talks about SoFi. He uses that, notebook smash. He also says, don't buy nothing, don't invest in nothing. Believe me, you ever watch any of his latest videos?
So the S&P 500
Let's see. Stock market collapse.
So the S&P 500 is down 5% from the February highs. We have the Nasdaq crashing 8%. Palantir is down 33%. Nvidia is down 30%. Even the mighty Amazon is down 16%. And Tesla, oy vey. Tesla, if you go back all the way to December 17th, not that long ago, it's down 40%. What the hell is going on with the market? What happens next? And what's the right strategy to handle this? Well, number one, I did tell you this might happen. A couple of weeks ago, I posted a video. I called it Palantir Investors Warning, Beware. And I said, hey, Palantir can drop 50% in a heartbeat before you can even spell grandpa.
That's one of his old buy dip. Yeah, the last couple of days. Let's see.
So the stock market is jumping off a cliff right now, but before you panic, stop. In today's video, I'm not only going to show you how to survive this. This is easy. I'm going to show you how to use this to make a lot of money. Stay tuned. This is about to get good. Now look, if you look across the board over the past week, everything is down. The Nasdaq is down 2%. The S&P 500 is down almost 5%. Tesla is...
Yeah, give us advice on pretty much what to do. The stock market collapsed. Dang, did several videos. Emergency does a lot of it's over. The stock market just crashed and stuff like that. Alright, and it's pretty much clear.
So the S&P 500 is down.
Pretty close to invest with Corey. He's pretty sure they use the same types of
From running a
videos.
business, getting married,
Urgent, do this. It's over. See, same thing. Oh my God, they use Tom Lee a lot. His likeness. Palantir. See, 12 days ago. Palantir, 12 days ago. Okay, so they both, I don't know, it feels like it's a copy. He just copies it. Same thing. What was that? Invest with Henry? Pretty sure they're all just gonna be the same. Alright, let's go invest with Henry. Come on. It's gonna be the same. Yep, game over. Buy now. Losing money, do this. Nvidia, game over. Nvidia, once in a lifetime. Yeah. SoFi too. Yep. So it needs to do this ASAP. Did he just this is 3 weeks ago, and he made one 2 weeks ago. And that's record. I'm telling you, I don't feel like. I think someone made a comment on one of my videos that he is not original. Invest with Corey is not original. He just takes other people's videos and makes it his own. Like you can see this. This is a 3 week ago, and then he made one 2 weeks ago, meaning that this one is definitely older. I'm pretty sure he talks about the same thing. The same thing as what Corey does. Anyways, oh man. So not only is Investor Corey a scammer, he's just unoriginal and just copies other people's videos, man. Just unoriginal, guys.